Just in the last year, Amazon stock has lost $600 billion in market cap. Hi everyone, my name is Parkev and I post videos on stocks, the stock market, and investing. I post videos daily, so if this sounds like something you want to get more of, please subscribe. Is this massive stock price crash for Amazon a buying opportunity or is it justified? I'm going to answer that by the end of the video, so let's get right into it. Amazon recently announced its second quarter results on July 28th, and it showed that operating cash flow decreased 40% to 35.6 billion, down from 59.3 billion in the trailing 12 months. Free cash flow was even worse. It turned negative 23.5 billion compared with an inflow of 12.1 billion in the trailing 12 months of the same time last year. If you recall, Amazon sales and profits surged at the pandemic's onset because, of course, hundreds of millions, billions of folks were looking to avoid shopping in person, and so Amazon was the most likely alternative, and it was arguably one of the biggest beneficiaries of that of the outbreak of this change in behavior where we were spending more time at home, and so sales boomed. However, that's not an easy thing for a company to deal with. It's not easy for a company the size of Amazon, which was approaching at the time 400 billion in sales, to all of a sudden have this surge in activity, right? If you're already at 400 billion and you get this big boom of business that increased sales by 40%, it's difficult to add the necessary capacity to deal with that customer demand. And if you noticed, if you were shopping with Amazon, you noticed a lot of things were out of stock, a lot of deliveries were getting canceled and delayed, and 2-day shipping sometimes was 2-week shipping, and we were all just happy to get the thing that we wanted, even if it was taking longer to deliver. And so, but Amazon was not happy with that operating in that kind of business, right? They didn't want to have uncertain delivery times. They didn't want to have all those out of stock items. And so management invested aggressively to expand capacity to deal with all this extra ordering activity, right? And so they didn't know how much to expand. And when you invest in a new warehouse, when you invest in this kind of expansion, it takes time for it to build up to come online. And so by the time it built up and all of it came online, Amazon noticed that customer behavior started shifting. Economies started reopening. We started spending less money on Amazon and we returned to our pre-pandemic habits. And even more so, right? We did revenge travel where we were going out and traveling more than we were before the pandemic. And so all of this is causing a major pullback in sales growth and profits decreases and cash flow decreases at Amazon, which we're seeing here, and we're seeing in that stock price in the market cap fall of nearly 600 billion. If we go down further here, we see net sales increased by only 7%. And for a company like Amazon, who's been growing double digits for the past decade, a 7% growth rate was the slowest in its recent history. And operating income was just 3.3 billion in the second quarter compared with 7.7 billion in the second quarter of 2021. So several major operational decreases for Amazon due to this changing consumer behavior. And looking forward to the third quarter, management said that net sales are expected to be between 125 billion to 130 billion, or growth of roughly 13 to 17% compared with the third quarter last year. Now that's good news if they actually achieve this, because that would mean an acceleration going from 7% growth in Q2 to 15% at the midpoint in Q3 would mean an accelerating growth rate, and that is good news for investors. And this is before, even this forecast was before Amazon recently announced a Prime Day, a second Prime Day here in the third quarter upcoming in October. So instead of just having one Prime Day in a year, this year they're going to have a second Prime Day. And management has typically said that having a Prime Day within a quarter causes sales growth of about 4% comparably relatively, depending on which quarter it falls into. And so we can expect maybe this revenue growth in the third quarter to come in the higher end of this forecast that management has given. And so that would be helpful. That would leverage some of that fixed expense that it expanded. All of that capacity expansion would get leveraged across a bigger sales base, and so profits may come in better than expected. Operating income, they said to expect between 0 and 3.5 billion. So about 1.7 billion at the midpoint compared to nearly 5 billion last year in this same quarter. So operating income a major decrease. But if sales growth comes in ahead of expectations, then you can also expect operating income to come in ahead of expectations as well, because Amazon has a large fixed cost structure, meaning when sales go up, the expense does not go up as much, right? They have fixed costs that stay relatively flat, and it gets leveraged as sales grows. And the opposite is also true, and why we're seeing falls in operating income and free cash flow, because of the fixed expense nature. When sales fall, operating income and free cash flow also falls more dramatically because they're fixed. They don't fall as quickly along with falling sales. So some good news to look forward to if you're an Amazon investor in the third quarter, but so far it has not been good news. If we're in the operating cash flow for the trailing 12 months, if we look at the first quarter of 2021, operating cash flow in the trailing 12 months expanded 69%. Massive increase, excellent for Amazon. But then it decelerated to just 16% growth, and then it turned negative in the third quarter of 2021 at 1%. Then negative, it got worse at negative 30%. Then it got even worse at negative 41%, and it finally stabilized in the second quarter at negative 40% operating cash flow. And you can see here the property, plant, and equipment for the trailing 12 months. 40 billion in the first quarter, 47 billion in the second quarter of 2021, 52 billion in the third quarter of 2021, 55 billion in the fourth quarter of 2021, and then 57 billion in the first quarter of 2022, and then 59 billion in Q2. Incredible investments. If you're looking at these figures, they're throwing around 40 and 50 billion on a regular basis here. If we look back at just the most recent 4 quarters, that's over $220 billion that Amazon has spent investing in its warehouses, planes, cars, delivery, servers, everything it needs for its business, capital investment. It's put in 220 billion. A massive figure to get your head around, 220 billion of investment. But that's what's causing, free cash flows is declining. If we look at free cash flow trailing 12 months, it was positive 26 billion, then it fell to 12 billion, then to 2 billion, then it turned negative 9 billion, negative 18 billion, then negative 23 billion, and in the third quarter it's likely still to be negative. But will it accelerate, or will it kind of stabilize and stop falling so much? And so all of these investments are coming at an expense, right? They're having to put out all of that money, and it's costing them. And that's just the nature of its business also, that as it grows, it needs to invest in more capacity, needs to get more warehouses. As it gains more customers and customers are ordering more items, it needs more storage space. As customers are ordering more frequently, they need more delivery trucks, they need more delivery vans, they need more airplanes, they need more capacity. And so it's just the nature of its business. As it grows, it's going to need to continue investing, which is one of the downsides to Amazon as an investment. Investors are always waiting for, when are you going to deliver profits? And this company has been historically operating at narrow operating profit margins. They've never delivered a quarter, I'm sorry, a year of operating profit margins in the double digits. 6% maybe is the highest operating profit margin they've achieved. And for a business that's generating sales of hundreds and hundreds of billions of dollars, and they comfortably surpassed 500 billion, but very thin operating profit margins. And so let's finish with looking at why and what specifically is causing the area that's causing the decrease in sales. So we look at their several segments of their business. They've got online stores, they've got physical stores, they've got third-party seller services. So these are the outside businesses that are selling on Amazon.com. They've got subscription services. This is Amazon Prime and Amazon Prime Video. This is Audible and those kinds of things, subscriptions. And then they've also got advertising services, which is growing nicely. And then they've got AWS, which is Amazon Web Services. And then they put in other category where everything else falls, which is relatively small. But more specifically, the area of the business that is causing all of the trouble is the online store sales. And that makes sense, right? Intuitively, we all know that we're not spending as much money online as we were at the pandemic's onset. In the first quarter of 2021, sales expanded 41% in this segment, but in recent quarters, sales expanded 1%, then negative 1%, and they were flat in the second quarter of 2022. This is what's causing trouble in the business as they have expanded. But additionally, Amazon is facing the same pressure that we're all facing and all businesses are facing, in that rising costs of inflation and labor shortages and all of that. Amazon is having to pay more for all of these services, and so costs are going up even though their unit growth may not be. And let's take a look at these first two items I've highlighted here. The one on the top is worldwide shipping costs, and the one below it is paid unit. So how many units are they shipping versus the cost of the shipping, okay? And the interesting thing to note here is that in the 2 quarters ago, even though they did not increase year over year, they shipped the same amount of things, their cost to ship those same amount of things increased by 14%. So they're shipping the same amount, but to paying for shipping that increased by 14%. It got a little better in its most recent quarter. It shipped 1% more units compared to last year, and the costs only increased by 9%. But still, a 9-time increase in your 9% increase compared to just 1% unit growth. So they're paying, that's delivery drivers. They had to give them raises. That's the cost of fuel, the cost of planes, warehouse, storage, and all of that. Those costs are rising. Meanwhile, their customers are buying fewer things. And I also highlighted here in green the hiring splurge they went on at the pandemic. They start first quarter. We go back here. First quarter of 2021, they have 1.27 million employees. That went all the way as high as 1.62 million employees. So they hired 350,000 people. That's not an easy thing to do, to hire 350,000 people in a matter of a year here. And they did this at a time when competition for employees was fierce. Businesses were offering sign-up bonuses. Come join us, we'll give you $1,000 bonus. No, come join us, we'll give you $1,000 bonus and we'll pay for college. No, join us, we'll give you $1,000 bonus, pay for your gas, and give you college. So all of this was happening. Meanwhile, Amazon was able to attract all of these employees, but they were paying a premium for that, and you could see that in their rising expenses. However, an important thing to note here is that they stopped this, right? They realized that they've got too many people at a time when sales are slowing, so they stopped this hiring splurge, and we could see employees, full-time employees, actually decreased for the first time in a long time from 1.62 million to 1.52 million. So they just, through attrition, every day, every week, a certain amount of employees will quit. They'll get exhausted. They'll face burnout. They might find a better opportunity, and so they'll leave. And Amazon just decided, you know what? As this happens, we won't replace them. We'll just decrease our staff just through attrition, and that's causing that fall off, the 100,000 fall off, and that might continue depending on what they see for this holiday season. If they see they need to hire for the holiday season, that may be more temporary and part-time staff before they choose to take them on full-time as they wait to get the staff to leverage some of their costs with the sales. So all in all, considering all of this, I would say that the decrease in Amazon's market cap of 600 billion, I don't know if the actual size of 600, should it be 600 billion, should it have been 500 billion, should it have been 800 billion? I don't know precisely if the decrease in market cap, the figure, is justified, but I do feel strongly that the decrease in market cap was justified. Their business, they overinvested in capacity, which you can't really, it's not to blame management for overinvesting, because this type of surge and decrease is changing customer behavior is so unprecedented. But you do have to, as an investor, pull back your prospects, pull back your thinking of the business that now has all this extra, is burdened with all these extra expenses that is going to take time to reduce and grow into. And so for that reason, you're going to want to pay a lower price for the stock than you otherwise would have. So to answer the question posed in the headline, should you buy Amazon stock now that it's down 600 billion? And I would say no, not just yet. I would wait to, they're about to, in the next few weeks, they're going to release the third quarter earnings. I would like to see those earnings, see if they were able to decrease costs, and if revenue growth came in at the higher end of expectations of management expectations, and the higher end of operating income. And then perhaps we can adjust our opinion whether or not we should buy it, based on if they can leverage some of those costs and decrease these losses, and see if their employee expense, their inflation, is coming down. So to wrap it up, don't buy Amazon stock just yet. Put it on your list. Wait for the price to come down lower, and also wait for the next earnings to come out, and let's take a look at the data, and I'll have a review, so make sure to subscribe, because I will have a review of Amazon's next earnings, and I'll give a recap, and I'll discuss whether or not that could be a good entry point for investors interested in buying Amazon stock. So thank you for watching, and tune in next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.